next question is from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi. Good afternoon. My one question was on the insulin part only. So, what we have been saying, does it mean that we get only marketing and distribution margin as a percentage of revenue, and hence we expect lesser impact in margins? That is what you are trying to say?
No, we get traded margins on the portfolio, but these traded margins are capped at an arm's length basis. And therefore, in case we are less than arm's length, we expect the compensation to come from the group. And therefore, as I said, the flow through will not be to EBITDA completely, although the overall value may deplete.
Okay. Thanks for the detailed reply. And one thing, what is the size of the domestic business X of divestments what we have done in 2021, and what was the growth in the remaining business which has not been divested?
So if you look at the question is more for the retained business which has not been divested, the overall increase is roughly in the range of 13%.
So this 13% is X of non-divested business. And the size of that non-divested business is?
It's close to 2,240 crores.
Okay. And one more thing.
Yeah.
We have not brought many new product introductions in oral dosages in diabetes and cardiovascular. Okay. What will be the impact on us, and what is the strategy for us? Means, especially when diabetes is a core therapy for us. So how do you play the market where many more oral dosages or many more products are coming in the oral dosages, and we are having reduced market share? And secondly, is cardio core business for us now because of we have not introduced many products? So just some thoughts on there will be helpful.
Thank you. So the first part of it is, as far as diabetes is concerned, as a innovator company, for us the focus is entirely on insulin, right? At this point of time, because some companies are focused on insulin, some are focused on introducing new oral diabetes molecules, and our effort has largely been in the area of insulin. And that's where we are looking at a pipeline to build. And as we said earlier, it is a heavily underpenetrated part of the market, and there should be a significant headroom, not just in terms of new products, but also in terms of sheerly increasing the capability and capacity for physicians to be able to prescribe insulin. Having said that, we are completely open to being, aligned and get partnerships with other companies or anywhere, even in oral diabetes or cardiology, where we can add or leverage the strength of our team as well as our current equity, which we have with physicians in the market. So that we keep exploring, and that is still an open, but we don't have a pipeline very specifically for oral diabetes right now. As far as cardiology is concerned, yes, there are some products which are launched already in other parts of the world. We are looking at them if there's an opportunity to bring them.
Okay, and one last thing. What would be like-to-like growth of the market where we are present versus 13% for us?
Broadly, we would be in line with the market. If you remove the COVID specific entries and exits, we would broadly in the areas where we are, we would be in line with the market. Yeah.
Okay. I'll join back in the queue. Yeah. Thank you.
Thanks.
Thank you. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Yeah. Hi. Good afternoon. Am I audible?
Yes.
Yeah. Just continuing on previous participant question. Now, sir, we've stated that our focus is to grow the insulin part of the business and the under penetration. But if we look at most of the domestic companies, like the tie-ups which Lupin has done with Eli Lilly or other guys are doing, in terms of they have a good pipeline of oral products, and then they are introducing the insulins. Doesn't it create for them the ability to graduate the patient from oral dosage to insulin and the doctor staying in the same realm rather than for Sanofi, does it create kind of a handicap because we don't our oral dosage kind of products other than Amaryl are not many, though we have one or two in the Sanofi Synthelabo, but does it create kind of a handicap to gain the market share even in insulin in over a longer term?
No, I think, we've been in the continuum even before, right? Even when a lot of new oral products are not there. Generally, we find that there is no, doctors do not, or physicians do not look at a company continuum of products while they prescribe to patients. I think there is a very specific medical need when they prescribe insulin, and basal insulin, which is the gold standard of prescription, is something that we have introduced in the market almost 15 years ago. So there is no real reason to look at any big advantage which you get from a continuum of treatment for products being within the same organization or company. On the second piece of it, I think different companies, building insulins is not just about, making it available and detailing. There's a significant amount of work required around the product. For example, we have a patient support program where we provide, guidance and support to over 100,000 patients every year. We are one of the few companies which has a reusable pen which we provide to patients so that they are able to get initiated early. Insulin is a much more sophisticated treatment which requires a lot of support both from the physicians as well as the rest of the ecosystem. So it's not just a normal sort of transition from a tablet to an injection.
Okay. Second question, sir, if you look at Parent and 1.5 years back in the Analyst Day, we had Sanofi Global had mentioned that they wouldn't be looking at CVS and diabetes because we don't have a breakthrough products in there, and the focus was more on specialties and rare medical disorder kind of products where our R&D pipeline was pretty strong. Now, if I look at from Sanofi India perspective, is there a change in terms of the Parent's focus of rather than only looking at the pipeline, we get more independence in terms of launching more therapy oriented, but more independence in terms of products rather than looking at only what the Parent has in terms of pipeline, or our product selection would be limited to what the Parent has?
A good question. I think the first part of it is that we have globally said that we will not focus on the research part of insulin and diabetes and cardiovascular. We have not said that we are not open to partnerships or accessing any new products from others. And in fact, we have even recently been in that journey and looking at closing those kind of partnerships. So it's just that we felt that by investing in basic research, we would not be creating any better value for patients than what is already there in the market. However, on the development side and in partnerships and introduction, we've been doing that in different markets, and India is no different. We will be completely open to receiving any products which fit our portfolio, and some of these could be sourced by the group itself, and some could come from outside. As far as the freedom, as you are saying, to launch anything in India, we obviously prefer products which are within the group, because it gives us many more advantages in terms of sourcing, in terms of medical support, in terms of further sort of pipeline on the product. But should it be fitting our therapy areas, we would consider any kind of introduction. But
for example, in Toujeo, it's not a new development, but it's a first in the world kind of.
For example, Toujeo is like Bible says, a very good example. We do not have a reusable cartridge anywhere in the world on Toujeo, specifically developed for India by our teams here in collaboration with our global team. It's manufactured in a plant in India. So to that extent, we have enough sort of opportunity to build, but in the areas which we have identified.
Sure, I'll come back to the queue.
Thank you.
Thank you. The next question is from the line of Samir Deshpande from Fair Deal Investments. Please go ahead.
Hello, good afternoon, sir. I would like to know that regarding Lantus, we heard from you regarding the drug policy which is yet to come there, and actually if it is not yet effective. But now another product was launched by Biocon, which is Semglee, which is the first biosimilar. And I think from August onwards, they have launched it abroad, not in India yet. So then the price which they mention is around 65% lower than Lantus. So would that affect if it is sold in India?
Thanks. So first, let me re-clarify once more. The Lantus, government pricing, etc., is purely something which has been triggered in a couple of media things, but there is no official, list on that. So I think we should keep that out of the discussion. As far as the biosimilar is concerned, yes, but biosimilars have been there in India now for over 7-8 years at a lower price than Lantus, and they're not exactly biosimilars, but some of them have been there. And as I said before, to develop the market, it is not just about making a medicine available. It's a significant amount of investment around education, as well as training and making patients comfortable with it. So that is a big capability which we have built over the last 15 years. And that is why even though you have, similar products in India, they have not been at a lower price. In fact, they have not made much of a headway. Having said that, the specific case of what you mentioned, which has been launched, that's a pricing with respect to the pricing overseas. We have no idea about what the pricing in India will be, but I don't think it is something that at this point of time we would be too concerned about, for the simple reason that developing, the insulin regime and treatment amongst patients is not just a question of it being cheaper. Price is not the biggest barrier for the adoption of insulin in India. It is about treatment, education, etc.
Achha, so then the quality of the product of Lantus has been proved over last so many years. So whether the biosimilar will be in a position to give the same results is also questionable.
I cannot comment at all on that. It's purely this thing. All that we can be very sure is about our product.
And now this regarding this volumes, you mentioned the volume growth for insulin during the current year was about 5%.
That's right.
For our products particularly. And the Toujeo product which has been launched, what was the contribution during the current year sales?
I think, Toujeo, this is probably not the best year because anything that we tell you will run, in very high, percentages because it's been launched for half the year and it's been launched as a new product. All that I can say is that next year perhaps is a better idea of looking at what the ratios of these are. Yeah. But we are very happy with the performance of Toujeo right now.
And last question is regarding the sales growth. You mentioned that excluding the products which were sold under Zentiva, generic products and nutraceuticals, the sales for the current year, 2021, are around 13% higher than the last year for comparable.
That's right. On a pure retained business basis, it's a 13% growth compared to the previous year.
Okay. So now current year again we have sold the soframycin in the current year 2022. So that I think is expected to reduce the sales by around 75 odd crores further.
Yes, around that value. Of course, it varies year on year, but it's closer to that number. Yes.
Around 70-75 crores. And this nutraceuticals, what was the sales contribution in the current year for nutraceuticals in 2021?
The total contribution for Nutra in the current year is in the range of 5%.
It's 5% of 2,900 odd crores. That is 140-50 crores.
5% is on the domestic business sales. I don't usually give you, even the earlier explanation on 13% growth is on the domestic business. So 5% is domestic business contribution. If you look at including export, it will be much less.
Clear? Thank you.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Vishal Manchanda from Nirmal Bang. Please go ahead.
Thanks for the opportunity. I have a question with respect to your established product portfolio. So you are seeking profitable growth in that segment. Can you share what percentage of your business would you qualify as established product, domestic business?
Yeah. Just give us a second.
Around 50% of our current business would be the established products.
And this is 50% of the domestic sales.
Domestic, yeah. We only discuss domestic.
And from a top line perspective, how would this be growing in terms of value? Could this be mid-single digit sort of growth in the established product?
More like single digits. Mid-single digits to maybe somewhere in say 7 to 8% kind of growth is what we establish. Of course, within that, you will have parts which we focus on which will grow well above in double digits, depending on the brand it is and the prioritization that we have.
Right. So for the rest, so for you to clock double-digit growth, the rest of the portfolio has to be between 10 to 15%.
Yeah, I guess you could deduce that yourself on that math, but generally we are operating in certain areas which are high growth, and we would like to beat the market on that.
Okay. And on the insulin front, so would you be launching a premix insulin, because that's where you don't have a product category, and India is quite large on the premix front?
I can't comment anything on our launch plans right now. We have enough market development which we are doing right now, but obviously, we are thinking of all the options to keep growing the market.
Okay. And just one more on Combiflam. So you had introduced the topical version of Combiflam, gel and spray. Any color on how that is performing?
So we've not delivered as much as we thought we would on that, and we are therefore relooking at the mix. It has had very good success in the bigger cities and in certain pockets of the country, but I think we would be looking at it, more in terms of the total portfolio and relooking at the brand again for launch.
Okay. Thank you. That is all from my side.
Thank you so much.
Thank you. The next question is from the line of Harshal Patil from Sharekhan. Please go ahead.
Thank you, sir, for the opportunity. So most of my questions are answered. I have just a few bookkeeping questions to ask. So we're seeing that we'll be focused more on our diabetes portfolio for growth ahead, and for cardio, we are kind of looking at getting some brands from other markets to India. So, sir, I just wanted to know what would be the combined contribution of diabetes and cardio in our total revenues right now?
So we don't look at it separately. So our only thing is we look at diabetes, insulin and diabetes, which I told you is roughly closer to about 30% of our portfolio. Yeah. More specifically, cardio is an interlinked therapy.
Right.
So
30% would be diabetes, so to say, so the insulin products, so to say.
Yeah, that's right.
Okay. And got that, sir. And lastly, sir, also just wanted to have what would be your share of export exports in total revenues for CY21?
This current year is 13%.
Okay, so that's CY21. Okay.
Thank you.
Thank you. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one. The next question is from the line of Cinderella Thomas Carvalho from Centrum Broking. Please go ahead.
Thank you so much. So on the transaction that we have entered with our merged subsidiary entity now, and we had highlighted that we are restricting it to almost 1,000 crore per annum kind of a limit from the current exposure of 380 odd crores. So can you please explain this transaction? I understand that you had highlighted that there are purchase agreements in terms of Lantus and...
Just repeat your question. Sorry, we just couldn't hear you clearly. If you can slowly repeat the question.
Am I audible? Is this clear now?
Yes.
Yeah, so I am asking in terms of our agreement with our merged subsidiary entity here in India, where we have entered a transaction wherein we can have a purchase agreement almost up to 1,000 crores limit per annum. So
That's right.
yeah, so there I'm just trying to understand that we purchase generally our larger brands from this entity. So what kind of transaction are we looking ahead? And we had mentioned a comment also saying that we are looking at a very high growth in these particular brands that we transact in with our subsidiary. Can you highlight on these and explain a little bit more on these transactions?
Yes, so I think you're referring to the postal ballot. Basically, the approval that has been sought is for 1,000 crores over the next 5 years. So right now, what we are purchasing from the related party, which is Sanofi Healthcare India Private Limited, is Lantus and Toujeo. And like explained by myself and Raja, both of these are high growth areas for us. And essentially, what we are, the purchase agreements relate to the purchase of Lantus and Toujeo from this entity, which is then made available to Sanofi India Limited for selling in the domestic market. The transactions, the limit of 1,000 crores is more on considering the growth over the next 5 years, and therefore we have sought an approval for 1,000 crores.
So it's the kind of growth opportunity that we are seeing, wherein existingly we are doing almost 380 odd crores, right?
So yes, the current business is in that direction, and as you go along, the procurement will increase as both of Raja and myself are explaining. Even if you take basic market growth for insulins, we will be in that range as we move ahead. So therefore, the approval is sought for considering the basic market growth in this segment.
Okay, and now just coming back to our business, and if there is any kind of risk which comes to the insulin range, what is our risk mitigation strategy there, and what kind of sustainable volume growth that we can expect in worst scenario wherein we'll have some price impact on the top line? So if you can help us understand this.
So like I explained earlier, on the risk mitigation side, the price drop will have a limited impact. I'm not saying it will be not there. There will be a limited impact on the bottom line. The flow through will not be as much as in the profits as much as in sales. In terms of volumes, of course, if there is a drop in price, in fact, the traction in volumes is expected to be better as because our product, which is as we say, it's a better quality product, and therefore we are expected to see more volume traction as we go along. But I would probably even ask Raja to comment on the volume part of it.
So look, the fact that products will come under price control is a reality. We've had this even 5 years ago, and we continue to sort of grow some of those brands. As far as insulin is concerned, we believe that while price is not really the biggest barrier for growth at this point of time, should there be a reduction in headline prices of insulin, we will have a larger opportunity to go even further down and penetrate even smaller cities or make it accessible because there is a large market for lower priced insulins anyway in the country right now. And therefore, we believe that there will be an opportunity to grow volumes, in that. So I think, it is something that the company is prepared for. We have, we are in readiness should such a situation arise.
So one can consider a double-digit volume growth possible. Is that a fair estimate?
I can't sort of give a comment on specifically on that, but I think historically you have seen that we've always been growing a reasonable sort of amount of volume in the line with the market.
Would it be possible to share the exact domestic sales number and the export sales number for CY21?
Yeah, so the domestic sales is in the range of 2,400 crores and the export sales is around 350 crores.
Okay, thank you so much.
Take one more question.
Thank you.
Yeah.
The next question is from the line of Suchi Narula, from an individual investor. Please go ahead.
Yeah, and thanks for the follow-up. I just wanted to understand the margin profile on Lantus compared to your other brands, because the salience of Lantus will keep on increasing as it has a higher growth profile, and therefore on a blended basis, what does it sort of portend for our blended EBITDA margins?
So like we mentioned at the beginning, we don't comment on specific product margins.
But here you are distributing and detailing on the product, whereas on some of the other products you are manufacturing. Would it be a reasonable inference that margins on Lantus could be on a percentage basis lower than the other products?
That's right. On an overall basis, if you look at the blended percentage today, the Lantus or the insulin margins would be lower than the overall.
And therefore, continuing on that, would it be reasonable to assume that going ahead, the margin profile will be under pressure, or you have some cost levers to offset, the arithmetic average of Lantus growing faster than the other brands?
So if you look at it, there are three priorities. One is accelerate diabetes, selective and profitable growth in the cardio-diabetes segment, and higher growth in CHC. So if you look at it on an overall weighted average basis, we don't see any reason why overall it should be significantly lower than what you see today.
And I think even otherwise, I think it's not a deduction that you can possibly make, because there are consistently different elements which come with volume. Yeah.
And
Go on.
Yeah. So, pardon my ignorance here.
Just to kind of add, over the last couple of years, if you look at historical performance, and again, this does not mean that you can infer the same for the future, but despite of Lantus and insulins growing by, let's say, 15-20% year on year, our operating profit as a percentage to sales has actually grown, if not remained the same. Again, just clarify that it does not mean that it's a guarantee of the same thing in the future, but you can probably see that it's a combination of multiple factors which gives us your margins.
Right. So I mean, if I look at the profile of margins over the last 2 years, your exports as a proportion have gone down, which has had a favorable impact on margins. Your sales force has sat home for some time, which at least during that time has had some impact, which is favorable on your margins. You've sold off nutraceuticals, that's impacting your margins. And therefore, I'm simply trying to understand, would margins that we've seen in the last 2 quarters, specifically would other expenses that we've seen in the last 2 quarters, added together, be a reasonable representation of your other expenses or margins going ahead?
No, as I said at the beginning for one of the questions, that if you have to look at operating expenses as a percentage to sales, please look at full year numbers. The last quarter numbers are not necessarily representative. And to answer your question on the other part, on operating profit as a percentage of sales, even in the earlier years, when you look at the evolution from 2017, which was without all these other factors, you have seen a growth excluding exceptional items as well. So broadly, as I said, the margin profile largely remains the same, despite the mix that you see in different segments.
But the full year of CY21 would have had non-recurring impacts of COVID as well. But you think other expenses for the full year CY21 are still representative as a percentage of sales going ahead?
I would say there will be some likely increase, but I would say they are largely representative, because you can say the 2021 numbers are also dependent on the ratios, are dependent on the sales value. So that also has an impact. But as we also mentioned at the beginning, we are not necessarily looking at OPEX reduction based on the hybrid models. We are also looking at increasing reach and therefore having an impact on volumes. So I would not like to specifically comment on the expense profile of 2022, but you can infer based on these comments on what's it likely to be going forward.
I understand. Again, pardon my ignorance here, but would it, I mean, again, a conjecture, is Toujeo going to cannibalize sales on Lantus? I'm just asking. I don't understand this very well.
Well, it's not designed to cannibalize on Lantus, because there are different patient segments for which Toujeo and Lantus are, meant for. Of course, there will be some overlap, which is there, but our at least 1 year or 1.5 years of experience with Toujeo indicates that a large portion of it has come from new patients and not come from cannibalization.
Could you elaborate a little more on the addressable market? How is it different, and what's the addressable market size for Toujeo and growth profile for that?
Anybody who today is unable to achieve optimum control on diabetes with the standard of care, which is a protocol of treatment, typically initially starting with oral medication and it does not work, is at the addressable market for insulin. And that's a very, very large market. Within that, there are different alternatives available, and I think Toujeo has got a very, very large market, just as much as Lantus has in that.
Right. And Biocon's glargine was given interchangeable status, and the reference drug was, I think, your product. Obviously, they will use that as some sort of marketing strength or incentive too. And do you therefore see the competition from them and some of the other companies intensifying in the domestic market?
We're really glad that there is more effort being put in the share of voice that insulin is getting overall in the market. I think if there are a few more, if the players are going to increase the effort on promoting insulin for the right kind of patients, I think it will just expand the insulin market, which today in India is significantly underpenetrated compared to the rest of the world. So I think if there are more, authentic conversations on insulin, I think it will just be good for the overall market. As far as interchangeability is concerned, that's of course, as you stated, it's not in India. But having said that, I think we're more interested in growing the market, and that's really the bigger opportunity rather than market share.
Right. And finally, with your permission, just one more question. And I mean, in your previous interaction, you indicated that your attempt will be to, or rather that given the aging profile of your brands, that it will be difficult for you to grow in excess of the covered market on an overall aggregate basis in the domestic market. Is that something that you maintain, or do you feel that with your efforts on digital, with focus on growing volumes and so on, there's some change on thoughts there?
I think what we said is that our focus is not to try and exceed the aggregate market, right? Our focus is to grow in the addressed market. It's not that we are not keeping an eye on the overall market, but In some years, we have grown faster than the overall market because the portfolios where we are present have grown significantly, and that market segment has grown significantly. The last couple of years has been, I would say, there are a lot of aberrations due to COVID. Now, as the market stabilizes in 22, our expectation is that the therapies where we are focusing should drive a large part of the market growth. And that therefore should help us in the overall aggregate growth as well.
Right. Thanks, sir, and all the best to you. Thank you.
Thank you very much.
Thank you. Ladies and gentlemen, in the interest of time, we take one last question from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, my question was how much would be the increase in physicians who are prescribing our insulins in last 3 years, and how this is in reference to your approach to grow the market, okay? And how many physicians will be prescribing our products currently? Secondly, what is the opportunity size, or what percentage of doctors are prescribing our insulins, and how is the penetration for us in tier 2 and 3? And how would it have improved in last 3 years of effort? And entering or more penetration in tier 2, tier 3 cities, would that be the thing what you are trying to emphasize when you are saying that you want to grow the market, especially for insulins?
So look, we today reach over 100,000 physicians as a company, through various of our teams at this point of time, and different specialties prescribe different medicines and different therapies. So I think exactly to say who prescribes what, while we have an idea of it, we normally would not want to share that kind of information. But having said that, I think you could take in terms of indices, I can probably give you a sense that if we have about 100 physicians who might be prescribing diabetes related medication, at any point of time, you might have closer to about 30 to 40% of them who may be more sort of comfortable with prescribing insulin, and so there is one big headroom over there. Second, we as a company cover nearly 75 to 80% of the universe of all physicians who cover that, who prescribe some diabetes medication. So there is a headroom over there. Much of this headroom is there in smaller cities, and therefore, obviously, that's where we are going to see more growth coming at this point.
What special efforts are you taking to grow in tier 2, tier 3 cities? Can you say where the scope is bigger, and how are you trying?
So, several initiatives. Of course, we are physically reaching more number of doctors through over the period of last 3 to 4 years, we have actually increased our coverage, physical coverage of these doctors. We also now have hybrid coverage through digital mediums and through programs which we have either through omnichannel, through digital detailing, through virtual conferences. All of those are efforts that we have in place, which we are engaging physicians with. We also have the advantage of multiple therapies which go to these physicians. So we use that opportunity also to reach out to them. But primary focus is on educating more number of physicians on, both the treatment of the disease as well as demonstrating the clinical superiority of our medication.
And one last thing, can you give some highlights on growth in exports or the opportunity for us, what remains on exports, and what are the products or regions where we are exporting? Some highlights of that would be helpful.
Yeah, so on the export side, I think we will leverage we'll try to leverage on the low cost advantage for India, and the effort will be to try and as much get more volumes from the group to the Indian manufacturing side. So the effort will be to clearly leverage on the cost advantage that we have, and we'll continue to focus on that. In terms of the geographies which we cater to, so currently we are catering to Australia. We are also catering to a large part of Europe, Sri Lanka, and there is exposure also to the Russian market as well.
Okay. Thank you from my side.
Thank you.
Thank you.
Thank you everyone for your comments and your questions. The company has issued a postal ballot notice dated 14 February for obtaining approval of members for material related party transactions with Sanofi Healthcare India Private Limited, a related party of the company. The details of voting and the results have been mentioned in the notice. We will also be sending out the annual report of the company for the year 2021, and we will be holding our annual general meeting on 26th of April 2022. I would now request Mr. Rajaram Narayanan to give his closing remarks. Thank you.
So thank you everyone for dialing in and asking very pertinent and insightful questions. As I said in the beginning, I think we have a very clearly defined strategy. Our focus is on growth in the areas which we have identified. We are very deep believers in the opportunity which is there in India, and more importantly, the fact that we can reach and impact far more number of patients than we've been able to do so far. And along with the support which we have from the group and the commitment which we have from our employees, we certainly expect that the years which are there, along with the initiatives of the government, we should be able to continue to make a big difference to the patients in India. So we will stay connected. Thank you for your suggestions. Keep sending them in to Radhika, our company secretary, and we'll connect with you soon at the next occasion.
Thank you.